there actually a possibility to pay zero in taxes legally?
I pay 0% in taxes legally. I haven't paid taxes since 2019 off of a 7-figure salary, and I'm running an 8-figure tax and accounting firm. And then everything that I'm doing is by the book. It's legal. The government knows Carlton Dennis and what I do, and yes, I do it every single year. People think that when you put your logo on your car that it all of a sudden makes it a write-off. It does not make it any more of a write-off. The IRS does not care that you blasted your logo across your Tesla truck or whatever it is. Yeah. Before I had all this muscle and all of this, I was bullied because I was short. My name was Carlton, and I mimicked the exact same Carlton from the Fresh Prince of Bel-Air.
Is it possible that taxing the wealthy would be a actual reasonable strategy?
No, people have been trying to do this for years. The rich people know the differences between their tax accountants and their tax advisors. The poor and middle class get this confused every single year.
I want you to just be open and honest about what you think about Trump, good or bad. Like, are they doing the right thing? Is the American people seeing financial success?
Yeah.
Or is it a difficult, turbulent time right now? All right, ladies and gentlemen, welcome to the show, Carlton Dennis. Brother, I'm excited to talk to you.
Yeah.
I think we've been trying to, vicariously through other people, been trying to get connected over time. And I'm not gonna lie, man, at first I was like, who is this guy? Ryan was telling me about you, and he was like, oh, he's an incredible guy. And sometimes I look at people and I'm like, man, there's a lot of gurus out here. I don't know who to trust.
Yep.
But after looking at your content for a little bit of time, I'm like, this guy is trustworthy. We know a few people in common, and that, to me, that validates who you are. I listen to your content and I'm like, yeah, this guy know what he's talking about, right?
Yeah.
So that's one of the reasons why I said, let's do it, man. Let's sit down and talk. And I don't mean to throw race into this, but it's good to see another brother being successful, doing the right things, having a successful business, educating people about finances, which is not as prevalent in the communities I grew up in. I don't know, me and you probably grew up in different communities, but it wasn't as prevalent. So I just want to, tell the audience a little bit about you, man. Where you come from, what do you do now, and how in the world are you so successful, bro? Because I look at your stuff and I'm like, I need to get on his level.
Yeah. Well, first off, man, it's an honor to be on here. We ride in the same circles, and part of the reason why I'm here today is because I communicate tax knowledge very well. I started out, building up my business in California, working underneath my mom. My mom has been in the tax and accounting space for over 30 years. So coming out of college, I got a job working for this company called Gallo Wine Company, and it was a family-owned company. And I was helping grow this family-owned company, but I wasn't making any commission. It was a non-commission-based sales job, which I would never recommend that to anybody. And so I was busting my ass at 5 o'clock in the morning, realizing I'm not making any more on my paychecks by showing up like this. So my mom started noticing my effort, and she says, listen, bring that effort over to our family-owned business. You build out whatever type of sales department you want to build out here. Well, that's where it all started. I had no tax knowledge. I just had sales skills. And coming into a tax and accounting business without any tax knowledge is a very uphill slope to go. So I spent a lot of time next to her, learning how she communicated, learning what really got people to want to pay a lot of money for tax advisory services for other than just filing a return. And that's what helped me build up my income to the point where I wanted to get my license. Now I wanted to have that credibility like my mom. I wanted to have, the ability to say I was an accountant or a tax professional on the phone, not just a salesperson. And so I had to study. I had to go get my enrolled agent's license, which is the highest designation the IRS gives out for tax and accounting. And I got on social media shortly after that. I went to Instagram, and then I went to YouTube. And this is where everything changed. YouTube. YouTube was the one place that gave me the best lead sources, the most attention, because there wasn't other tax professionals sharing strategies on YouTube.
Wow, man. How long have you been doing this?
I've been doing taxes since I was 20, and I've been on YouTube since 2020.
Oh, wow.
Yeah.
Did you see that during the 2020 craze? I think a lot of people blew up in 2020, especially on social media.
Yes.
Because people didn't have nowhere to go but to, monitor social media. Was that kind of, did you see a jump in your success because of 2020 and the COVID and all that stuff?
Yes, absolutely. Right around the start of COVID was when I ran into this guy. His name was Charlie. He lived in my apartment complex, and he had 1 million subscribers on YouTube.
Wow.
At that time, I didn't realize people can make money off of YouTube. I thought it was just for watching funny, skit videos.
Yeah.
But this guy seemed unfazed by COVID and what was going on.
Yeah.
And so when I got connected with him, he told me, he's like, hey, you should take your message that you have on Instagram and make it 9 or 10 minutes long and go put it on YouTube. I didn't know what I was going to talk about. So I Google searched, what do people look up for taxes on Google Trends? Yeah. People look up how to pay yourself as an LLC, how to place children on payroll. So those are the first 2 videos I did. And 90 days later, I had over 100,000 subscribers on YouTube with just a few videos.
One reason that makes you very successful is because you're articulate and you're very knowledgeable. A lot of people get on to social media and they think they're going to be successful and they're not knowledgeable about the subject, or they copy other people's stuff. But when I watch your stuff, it seems very authentic, and I feel like I'm learning something.
Yes.
And that's the difference. Like, everybody think they can jump on and just become viral. Some people can, because by luck of the draw, if you create, you do the right thumbnails, you clickbait a little bit, you could probably get some temporary viral success. But once you have to go from, I'm talking about this online, to I have to actually manage people's taxes, I have to actually help people make some money.
Yes.
That's when the rubber meets the road, and the difference between you and I think a lot of other people.
150%.
And so I want, it's a few different areas I want to go into with you, man, because I've been wanting to talk to you for a while. I want to start with this, and then we'll get to Donald Trump, because I know everybody want to hear about how is Donald Trump helping the economy, how is some of these no tax on tips, how all that work, and I know you can explain it, but I want to start out with with your upbringing. So you mentioned a lot about your mom. Now, I don't know a lot about, I didn't research everything about you. Did you grow up with your dad?
Yeah, my mom and my dad both married to this day.
Oh, wow.
My dad is always quiet, man. He was super militant-like, super disciplined. He was the guy that made us do push-ups, sit-ups while we're watching a movie on the couch. Like, hey, get up, do 100 push-ups right now. Do 100 sit-ups. My dad's just super-duper militant, super unsocial, had no friends, went to work, came home, loved on his wife, loved on his kids, and took them to football practice and made sure that they did their homework every single night. And, I gravitated a lot towards my dad's discipline in my later years, but I really loved my mom's personality, because my mom was the social person. She was the one at the team events, and, she was the mom that all the other students knew, Carlton's mom. And so my mom was very vocal in what she did, vocal in the fact that she helped people with taxes, vocal in the fact that business owners have an opportunity to reduce their taxes. And so I kind of gravitated towards tax naturally, because me and my mom are very similar.
That's awesome, man. Yeah. So growing up with 2 parents in the household, it's obviously, what's your experience with that? Did you grow up in an all-black neighborhood? Did you grow up in a mixed neighborhood?
Nope. There was no black kids in my neighborhood. I was the only black kid. Honestly, I was probably one of 10 black kids in my entire city. I grew up in the city of La Palma. It's predominantly Asian and predominantly white. I grew up next to Koreans and white people. When I went to school, every single person in the class was either white or Korean. I remember coming home from school and telling my mom, I want to eat kimchi and I want Spam musubi inside of my lunch pail. And being in a place like Orange County, where, to be honest with you, we kind of stuck out like a sore thumb, I had to conform a little bit to my environment. What that meant was I needed to be disciplined with school. I needed to show up and do volunteer work, because this was the things that were going on in my community and the things that my parents cared to make sure that I was in. And so I loved where I grew up, but I also didn't get to experience, being around other people that were the same color as me until I went off to high school.
So what was that like for you, man? Do you feel like growing up the way you grew up, were you alienated when you got around a lot of black people, or were you received?
Not really.
Because when I was growing up, if you were educated, if you were articulate, if you somehow didn't grow up and understand the black culture, people will bully you.
They bullied me.
Did you experience that?
Yes, I did. Before I had all this muscle and all of this, I was bullied because I was short. My name was Carlton, and I mimicked the exact same Carlton from the Fresh Prince of Bel-Air. I was articulate, I was short, and I liked to close off my sentences. And people judged me for that. I'm telling you, brother. People judged me for that. And so I remember being in friend groups, and I was the one that they would pick on because Carlton talked like this, and you know what I mean? And it's just so funny now, because those are the guys that reach out to me saying, Carlton, bro, I see what you're doing. Bro, anything I could do, let me know. Love what you're doing. So they're super supportive.
Yeah, so I love hearing people with a different perspective, different background, because there's a lot of riffraff in our country today about the achievements or the lack thereof of people of color. And a lot of it is saying, or a lot of people are saying, at least on one side of the spectrum, is that if you're black, it's almost impossible for you to achieve. If you're black, you got to worry about racism. One of the biggest threats to your success is racism. I mean, what was your experience? So you had an opportunity or had an experience where you were around white people. you had an opportunity to be around black people. And as a young professional in your 30s, have racism, in your opinion, been a determining factor in your success, whether negative or elsewise?
Yeah, so both of my mom and dad grew up in Los Angeles. My mom grew up in Compton, California, so every night she used to hear gunshots, you name it. And my dad grew up in inner city Los Angeles. A lot of his friends, didn't make it out of high school. So for them, getting out of a place like Compton and inner city LA, where there's just a bunch of gangs, to a place like Orange County, which was very safe, and specifically La Palma, which is the smallest, most safest city in Orange County. They had high intentions of making sure that they weren't going backwards. And when it came to me being, around other people that didn't have the same color as me, my parents did a real good job of educating me around what it was going to feel like. You are going to be a sore thumb, get used to it. It's going to feel like other people have it easy, get used to it. You need to love to learn the hard. And most importantly, don't view anybody differently than you. Everybody has equal opportunity. Everybody has the same 2 feet, the same brain, the same ability to study and achieve. And so going through life, I never viewed my circumstances different than other people, even though I knew the history. And so when I went to high school, this was when I really started to double down on trying to become really successful. I was surrounding myself with people who I felt like were just doing the right things. They were showing up to church, they were going to school and trying to get good grades. And most importantly, they treated their family members correct. And I went to an all-boys Catholic high school. Wow. So I was super disciplined in high school around making sure that I was building the right type of character. Yeah.
I love that, man. I sent my son to a Jesuit school for high school.
Yeah.
Cost me a lot of money, but it's worth it because I don't want my son growing up being a knucklehead. I want him growing up with excellence in mind, having a purpose, putting God first. All those things is very important to me. Now I want to get to some politics because you got both sides of the spectrum, right? You got some people that think that this current administration is literally tearing families apart and all this other stuff.
Yeah.
Mainly, I got the expert in taxes here with me now. So I want to talk about that.
Yeah.
The big, beautiful bill. What are the ramifications financially that you have seen with this administration? Do you give them a plus or a minus? Like, is he doing good? Is he not? And I have never heard your take on this.
Yeah.
But so I want you to just be open and honest about what you think about Trump, good or bad. Like, are they doing the right thing? Is the American people seeing financial success?
Yeah.
Or is it a difficult, turbulent time right now under this administration?
What I love is that I get to talk from experience now. I got to experience what it was like back in 2017 when Trump just got into office and he dropped his Tax Cuts and Jobs Act, where he dropped the highest tax rate of 39% down to 37%. And he incorporated bonus depreciation. And sure, did he close up some things and drop down your property taxes and your ability to write off, all of your mortgage interest? Absolutely. He stopped regular homeowners from being able to benefit from being homeowners. But he stimulated the economy and he allowed for business owners to thrive. We have seen more business owners than we've ever seen in today's day and age just because of the Tax Cuts and Jobs Act. It incentivizes people to become business owners and incentivizes people to be investors. But what he also did was he doubled the standard deduction. Back in 2017, before this whole big, beautiful bill, the standard deduction for a married filing joint couple was $12,000. That's just the basic deduction you get when you file a tax return. He doubled it to $24,000. If you were single, it was $6,000. He doubled it to $12,000. Now that we're here in 2025, because he made it inflation adjusted, the standard deduction for somebody is like $30,000 when you're married filing joint. It's like $15,750 if you're single. So that standard deduction helps out the everyday taxpayer based off of decisions he made on his last tax cuts. Now he came through this tax cut and said, you know what? I learned so much from 2017 when I had my TCJA. Here's all the additional stuff that I want to make permanent now. I want to make 100% bonus depreciation permanent. I don't want it to be on no sliding gradient. I want to continue to help out business owners and continue to stimulate the economy. And I want people to continue to buy vehicles that weigh over 6,000 pounds or equipment that can be utilized inside of their businesses. But what I'm also going to do is I'm going to stimulate more parents to have children by giving them a bigger child tax credit. He increased the child tax credit in this big, beautiful bill, and majority of people who receive the child tax credit get it refunded back to them as cash on their tax returns. So if you don't owe taxes and you're a low to middle class citizen, you have children, you claiming your children on your tax returns results in you getting money back in the form of a refund, which means that if you happen to have more children and you file tax returns with more children, you're receiving more tax credits. That's something that Trump just did. Most importantly, and probably the one that most people are happy about, is the no taxes on tips.
Yeah, that's a big
and the no
one.
taxes on overtime.
What is that? Because I have read, some people thought it was unlimited, right? Meaning that you can no tax on tips. If you made $100,000 of tips, you get no tax on it. But it's up to like 20 grand or something like that.
25,000, yes.
Can you explain that? Like, what do you see? Helping people obviously maximize their tax benefit. What do you see that? How do you see that going? Is that a positive thing for people, or is it not as cool as it was hyped up to be?
It's not as cool it was originally hyped up to be, because he didn't get no taxes on tips. What he got is a deduction for tips that you earn on your tax returns up to a certain amount. So if I make tipped income, I can report up to $25,000 as a deduction on my federal tax return.
That's still good.
That's still good, right? It's like maxing out a 401k almost. Right. It's pretty awesome. But if I make over $150,000 adjusted gross income, it phases out. Now I no longer get that. But what this does is it helps the average taxpayer, the middle class taxpayer, be able to pocket an additional $25,000 of non-reported tip income. That's absolutely amazing. And if you are working overtime, it operates the same way. It's $12,500 up to $25,000 on overtime, and it phases out over $150,000 adjusted gross income as well.
See, I love that, because I think that we're starting somewhere, right?
Yes.
I mean, people are all bent out of shape a little bit when they were like, oh, but it's not what it is. But it's like we started there.
Yes.
I think we can, as we continue to get people in office that understand what the working class people really need, and they're willing to be bold. Like, this is a bold step. I don't know if we've ever done this before, but I can see Donald Trump in the future, or J.D. Vance, or some other president that's a successor of what Donald Trump's policies are, going into it and saying, "Oh, let's increase it more. Let's go from 20,000 to 50,000, and eventually maybe no taxes once we get tariffs in place and some other things with the economy booming. Maybe we can afford to do that." I mean, it literally what I did with my staff, and oh, that's Josh right there. Nick don't know this yet. I ain't gonna tell them, but for the people downstairs that work in my warehouse.
Yeah.
So when people purchase online on my store, I give them an option to tip. Now, last year it was indiscriminate. They could tip to just help out.
Exactly.
So I changed it when Trump did no tax on tips, or at least the tax deduction on tips. I changed it to where if you give a tip on my e-commerce store, it goes to the staff. And so now, I mean,
nice.
be honest, they don't know this yet, but they've collected about $12,000 in tips so far.
Yeah.
And it's going to be disseminated to the people downstairs. And then they can have a deduction on just those tips.
Yes, they can.
And so the people that come here working entry level, which is $5, I think it's $3 or $4 or maybe $4 or $5 more than minimum wage. I don't pay people minimum wage.
Yeah.
I don't do that. That's way too low of a standard for me. I want people to have a good level of money making and success. We are out here in Scottsdale, so they got to drive out here, or the cost of living if they live out here is pretty high. So I make sure I take care of them on that level, but I want to put money in their pockets.
Yeah.
And for them to have some tax deduction on that it just helps me out. It's almost like I'm giving them a slightly a raise.
Without a doubt it is.
Yeah.
And you're leveraging something that Trump did in order for you to retain key employees, which is a value add. And this is exactly why you create policies like this. Policies like this can help stimulate business, stimulate the ability for a business to retain key employees by offering things like the ones that you're offering, which is the ability to transfer the tipped income down to your staff. Love that idea.
Yeah, and I think that obviously you know people that I know that are very wealthy. I feel like you do really, really well. I'll be watching you and watching how you travel. You do really well. And just real quick, and it's probably the last political thing I want to talk about, because I want to ask you a succession of questions that I know everybody's waiting to hear you talk about when it comes to tax deductions and LLCs and stuff. But Mamdani, the potential future mayor of New York, what do you think about wealthy people and their ability to circumvent him raising taxes to astronomical numbers for people in New York? Because they claim, and I want you to talk about this too, I don't want to give you too many questions at once, but they claim that we should tax the wealthy. And this is probably one of my questions here. They claim we should tax the wealthy. We see Mamdani saying it. Is that going to ever really work?
No.
Right? Because rich people, they hire people to take care of their taxes.
Yes.
When I was a cop, I was at TurboTax.
Yeah.
And I did it online, and I did standard deduction. And then one time I did some itemized deductions, but I looked online and some people told me some stuff I could write off as a cop. And I mean, I got a couple thousand back. And when you're making millions, brother, you got a team of people, or you work with people like you,
yes,
to make sure that you pay the least amount of taxes possible. Is it possible that taxing the wealthy would be a actual reasonable strategy?
No, the people have been trying to do this for years. Tax the billionaires, tax the wealthy. It's so funny, and the wealthy laugh because they know that they have no earned income. They have passive and portfolio income. You could try to tax them, but they're not going to report anything on their tax returns. They're taking loans against their own portfolios, against their own stock options, and this is how they've been able to build their wealth. They're playing an entirely different game. While everyone else thinks the game is black and white, they're seeing multiple colors. And they're just letting people just run their little puppet shows while they continue to do what they do.
And that's what Elon did, right? I never understood exactly how Elon did it. You know, my thought process is this, and then you correct me if I'm wrong, is that Elon Musk, obviously, instead of taking pay from Tesla, when he was getting options instead of pay. So he began to build this huge equity stake in Tesla, which now is worth $200-some billion. Now, when he would need to live off of a certain amount of income, he would just take a loan out against his equity in the company, I'm assuming.
That's correct.
Which will give him a debt. And then if correct me if I'm wrong, if he pays the debt to zero, then he actually has zero income. I don't know how you would work that, because he takes the money, but he has the equity, he has no earned income, so he don't have to. They're not going to show income on his statements, right?
He reduces his salary as low as he possibly can,
and then he borrow against. Does he borrow against his equity position?
His stock. He's issued stock based off of his equity position, because he's a C corporation.
Right.
And so what he does is he goes to a bank and says, "Hey, I need money. Go ahead and give me a loan. I'm going to go ahead and issue some of my stock as collateral." And so he's taking loans from the bank by issuing his stock as collateral. This gives him access to liquidity. And if he's investing into things that are business related, the interest on the loan is entirely tax deductible. Not only can he now have, a lower interest rate than 99% of the general public because he's Elon Musk, he can get a 2 or 3% interest rate while everyone's getting a 5 or a 6% interest rate. He can go back and say, listen, I don't think I'm going to pay this back by this time period. Let's just refi. And now he can refi a loan that he's taken against his own stock portfolio. And he could just keep doing this and doing this and doing this and never have taxable income. He's always just borrowing against his own income.
Is this what multi-millionaires and billionaires do? Like if you're, nowadays, you make a couple $1 million, it's not a big deal. I'm talking about people that's making 30 million, 100 million, billions. Is this kind of what they do?
Yes.
Is they borrow against their equity position, or they do collateral to get money from the bank, and then they never really have a really, really high level of income that they file?
Yeah. I would say some of my clients that have a net worth of over 50 million and above, this is all they do. They do private placement deals and just take loans against their portfolios. They almost entirely never try to report earned income unless they still have an active business on the returns.
So why do you think they pitch this? I know this is kind of like a political question, but why do you think they pitch it? If they're not stupid, at least I hope they're not stupid. They know people who are extra wealthy. Some of these politicians are wealthy.
Yeah.
And they know these people are never going to pay taxes. So do you think it's just a strategy for them to tax the living daylights out of the middle class? Because I know as a business owner, I try not to do this, but if it came to it and my lights were going to go off and I couldn't pay my employees, I would have to raise the prices.
Yeah.
So when they say, well, I'm going to raise corporate taxes, and they raise it to some astronomical number, it's like, well, I'm just going to have to raise prices.
Yeah.
Who's going to be affected, me or the consumer? It's going to be the consumer.
Yes.
They're getting taxed.
Yes.
Like I'm getting taxed. They're getting taxed. And if they do that to us and we can't make payroll or something like that, we got to do as a business.
Yep.
And nefarious capitalists, people who don't care at all, they're like, well, screw you. I'm always make my bottom line. They're definitely going to pass I would say their lack of savings on to the consumer.
Yeah. And you'll see corporations go overseas. They'll say, screw United States, I'm moving. Think about how many taxpayers during the pandemic or coming out of the pandemic said, you know what? I'm going to move to Puerto Rico. I just don't even want to have to deal with taxes anymore. You see Jake Paul and Logan Paul are completely set up in Puerto Rico. And you see so many other corporations have left the United States to go do business outside of the United States because of what they believe about the United States as well. You lower corporate tax rates, which is what Trump wanted to do. He wanted to lower corporate tax rates from 21% down to 15%.
Oh, my God.
Think about how many corporations would have jumped right back into the United States. How many millionaires are living down in Puerto Rico that say, you know, I'm going to bring myself right back over to the United States because 15% is a lot better than 21%, right? Now, when you know, the government says, "Oh, let's tax the rich," or you hear people saying, "Let's tax the rich." Biden was trying to tax unrealized capital gains.
Oh yeah, which was insane.
That would have been a nightmare. That means that you could literally be sitting on $500,000 worth of gain on your property, and you have to pay taxes on it even if you don't sell it. You could have a portfolio worth $1 million, and you wouldn't even have to sell it, and you're going to pay capital gains taxes just by the gain you experienced that year. That is insane to me.
But the crazy thing is that I was thinking about, and I could be wrong on this. Now, you get a good year, and you have a gain, and they make you pay taxes on that gain. What happens if you have a loss?
You just lose out
you lost the tax
revenue.
And you lose the regular money.
And you lose it. Yeah, you can claim the loss, but it just doesn't help you.
But wait a minute. Here's another thing. It's unrealized gain. So that means you haven't sold your stock yet.
You haven't even sold it, brother.
So how do you pay taxes on something you haven't sold? Do you have to sell stock to pay taxes, or like what? How do they somehow get the money?
They would essentially judge it as what is your basis at year end. So I bought Apple for $150, and at December 31st, it's worth $180. That's a gain of $30 that you're going to have to pay taxes on when you go and file your tax return. We're going to issue a 1099 for your unrealized gain. That is insane, brother. Because right when you cross over to January, what if that stock drops from 180 down to 140? Now you're reporting taxable income of 30 when the stock is less than what you nuts. Absolutely nuts.
I couldn't believe they tried to do that.
But they were wrapping their head around it and proposing it in the Senate.
Because it's saying, but you're like, I'm not a tax expert. That just don't make no sense. And I knew it didn't make no sense when they first said it. I'm like, unrealized gains. Dude, that's crazy as I don't know what.
You're penalizing people who haven't even experienced the success yet.
They're in the process of building success.
And you're like, yeah,
and you want to tax them to do what with it?
Yeah.
To blow the money? To go into more debt?
It's like putting weights on your ankles when you're trying to scale a mountain.
Right. Why?
You're inevitably going to feel the weight, and you're going to go slide down.
Right. Do you want them to get to the top of the mountain, or do you not?
No.
Right? Do you want people in America to feel a sense of purpose, a sense of drive, so they can build?
How do we keep them restricted?
Invest in the economy. And then they want to hurt it, but then the poor class of people, which some of them it's their choice, and some of them is they have unforeseen circumstances, but they are not contributing, and they're not contributing a lot. So why hit the people that are growing and building and can add value? Why punish them, but you don't punish people that add very minimal value? And I'm not saying you should punish anybody, but I'm saying at least you should give incentives to people that are building the wealth that this country needs.
That would create an even bigger wealth gap. If your goal is to try to help the middle class get out of the middle class and step up into the higher income classes, well, you need to make it as easy as possible for them. If you're going to tax their unrealized gains, you just widen the wealth gap. The rich will always figure it out. They always know what to do. But it's the middle class that can't pay for the right education and advisors to be able to get out.
Right, and I'm trying to be the rich. So that's why I got a couple questions I want to ask you, and I think we can. I know you're a busy man. I don't want to take too much time. I got a couple questions I prepared because these are questions that I think that the average American is either heard somebody speak about incorrectly, potentially, but they want to know about when it comes to taxes, that they need to know about, because people are going to get audited if they listen to the wrong people on the internet and they just scrambling through stuff. So I'm gonna ask you a couple questions that I think that'll be perfect for you to answer. And so the first question is, what is the number one tax mistake rich people never make, but everyone else does? So what is that thing that rich people can avoid that the average person don't?
Yes, the rich people know the differences between their tax accountants and their tax advisors. The poor and middle class get this confused every single year. They go to their CPA wondering, why do I still owe on my taxes, when you've hired your CPA to just file your tax returns? Most CPAs do one job: file returns, and do bookkeeping and accounting. They do not spend all of their time coming up with proactive ways and future thinking and forecasting for you on how they can reduce your tax bill. That's typically the job of a tax professional. The wealthy have both the accountant on their team that's job is to file the returns and the professional on the team whose job is to research the strategies and to come up with the strategies to minimize their tax bill. This is the game that they win at every single year. This is also the game that the poor and middle class lose at every single year.
And I have to say, man, even though I'm not in the middle class anymore, I'm losing at this game. I get mad every time I'm like, dude, why am I paying this much in taxes? I have the wrong view. Yeah. I need a person like you to help me figure out a strategy, because every year we get to the end and my CPA is just like, you probably need to, offset some of this money, some of it. I'm like, bro, I got less than 30 days.
Yeah.
What do you mean offset money? What is the best benefit? Do I put it in the retirement? And he don't have any idea. And by that time it's too late.
It's too late.
You
have 30 days left in the year. It's like trying to put Tom Brady in the fourth quarter of the game when he didn't open up the game with you.
Right.
You're
losing the whole year.
You're hoping you could pull off a miracle, but the best he could do is just throw an out route. Right. So I believe in doing tax planning right after July, because you already have a good amount of your income that you've earned for the year that we're able to forecast for the remaining 4 to 5 months left in the year. So that way we understand what is your estimated liability. What's going to be that number Uncle Sam wants to come and take out of your pocket, because that's going to be the number we want to change. But now you've given yourself runway time to actually implement strategies, actually to close escrow on a rental property, to get yourself underneath an oil and gas well versus just having to throw money at charity or retirement accounts or buying cars right at the end of the year.
But I want to be very clear with people. This is not just for wealthy people, right?
No, absolutely not.
Everybody that pay taxes need to understand tax strategy.
100%.
I got a couple of other questions that I want to ask. It says, is there actually a possibility to pay zero in taxes legally?
I pay 0% in taxes legally. I haven't paid taxes since 2019 off of a 7-figure salary, and I'm running an 8-figure tax and accounting firm. And then everything that I'm doing is by the book. It's legal. The government knows Carlton Dennis and what I do, and yes, I do it every single year.
I heard you say that in one of your videos, bro, and I was like, is he finna get audited right now? But you do it legally, and it's possible.
I am not afraid of an IRS audit. To be honest with you, I talk to the IRS probably more than any other tax professional with how many clients that I have. But my lack of fear comes from my knowledge around what the IRS looks for. And my lack of fear comes from my ability to take action on the things that the government wants us to do, which are the incentives that I love to share on social media about the tax code.
Love that. Why do billionaires pay less taxes than their secretaries? And how can the average person use the same strategy? I think we talked about this one already.
Yeah, because the billionaires are able to take loans against their own stock, against their own portfolios. They don't have earned income. They have passive income and portfolio income. So they're not taxed at ordinary income tax rates. They're taxed at capital gains tax rates, or they might not be taxed at all because they're taking those loans.
It makes perfect sense. Let's see. If you are just starting a business, or like just say if I was going to start a business today, should I be an LLC, an S-Corp, or a C-Corp?
This is a great question. For new business owners, you're always going to start as an LLC. Why? Because you're limiting your cost early on. If you go straight for a corporation, you're going to have to pay tax preparation for a corporation, which is typically double what it costs to file an LLC return. Plus, you have annual reports that you have to file and just a little bit more compliance requirements, like logging your meeting minutes every single year. If you're a new business owner, setting up an LLC is perfect because you limited the liability from yourself. You're saying, if anything happens with this business I just started, my personal assets, my personal IRS, all of that's protected. But then right when you cross over $50,000 in business profit is when you should switch to an S corporation. The reason why is because you will save more money by being in an S-Corp right when you're at $50,000 in net profit by eliminating some of the self-employment taxes that you're paying by being a business owner, which comes out to 15.3%. S-Corp owners don't have to pay 15.3% on all the business profit because you can give yourself a salary. LLC owners have to pay self-employment taxes on all of their business profits.
Right, and I don't want to expose myself here on the camera because I might end up realizing that I'm getting screwed, but I did switch to S-Corp, thank God, when I first started making money, because I realized, well, my energy drink company is a C-Corp because we have shares and stuff like that. So that's a C-Corp out of Delaware. But the my other businesses are S-Corps, like my main one, the Officer Tatum. And therefore, well, the way I looked at it is because the tax burden is just that one tax. My CPA, he filed business and personal, but the business revenue
Flows.
and it flows right down through
to your
me,
personal
and
tax
I
return.
don't have to pay a bunch of different taxes.
You don't pay double taxation because you're an S-Corp because it's a flow-through entity, whereas your C corporation, it files its own taxes and pays its own tax rate. And if you choose to take money out of the C Corp is when then you'll pay payroll taxes.
Payroll taxes.
Yep.
Yeah, for me, I have to take a
Salary.
salary. Yeah, because I do owner's draw with my other company.
With your S Corps, you'll do owner's draws. With the C Corp, you probably don't want to do owner draw in a C corporation. Yeah, because that'll cause double taxation. It'll be a nightmare. But you could take a loan from your own C Corp if you do need liquidity.
I got to work with you off camera. Y'all don't need to know this. See, you got to pay for these secrets now. All right, let's do a couple more. What's one crazy tax write-off nobody believes is legal until you explain it?
The Augusta Rule, people really can't wrap their heads around until it's explained because it sounds weird. Where do you get
Augusta Rule?
Augusta Rule. It's like, what are you talking about? August or Augusta? Is that a city? It is a city. Where did it come from? There's a golf tournament that's played in Augusta, Georgia every single year. It's called the Masters. In case you didn't know, it's the biggest golf tournament in the world. That golf tournament has been going on since the 70s. So in the city of Augusta, there's not enough hotels. That city allows for homeowners to rent out their houses up to 14 days without you having to report it to the state of Georgia. That means you can literally rent out your home for 14 days in the city of Augusta and not have to report the income you've earned from renting out your house. What if I rent out my house to Kobe or Shaq or whoever decides to come watch this tournament and I'm charging them $50,000 a day to stay in my house? All of it can be tax-free during this 14 days that I'm renting it out. Well, guess what? A year later, after the city of Augusta, Georgia enacted the Augusta Rule, it became a federal law. Now it's underneath IRC 280A. You can take a business and write off your, you can leverage the Augusta Rule by renting your business to your house, renting your house to your business for up to 14 days. And it's completely tax deductible.
So the first 14 days of the year?
It doesn't have to be consecutive.
It doesn't have to be consecutive.
It does not have to be consecutive. So if I chose to run a live event at my house today and I just want to do a live speaking event, I could choose to have a couple of camera crews at my house and I'm renting out my house for business that day. And I can charge rent to my S corporation a fair market value. Now, what some of my clients do who live out here in Arizona is we target the Augusta Rule as the same time that the waste management golf tournament is going on. Because typically rents here in Phoenix, Arizona is double during that tournament. So I can get maybe $3,000 a night for a customer, whereas I would normally only get $1,500 a night for renting out their house to their business during the same time period as the tournament that's going on out here, the golf tournament. Part of the reason why that's so important is because in order to take this deduction, the IRS wants to make sure that you have comparable rates. How are you justifying the fee that you're coming up with to rent your house to your business? You have to go and find other houses that have similar square footage and similar bedrooms and bathrooms. So if I have a 3-bedroom, 3-bath, 2,500 square foot home that's down the street in Arizona, I need to be able to look up other places that have similar square footage and find out what are they renting for on Airbnb, on Zillow, or on Redfin, so I can come up with a comparable rate and draft a rental lease agreement. The rental lease agreement is going to be between myself and my corporation, and I'm going to sign it and make sure that I pay from my corporation back to myself over the course of 14 days. And that money is entirely tax-free. Most people, when they hear about that, they're like, how can you do this? Until they actually have a business and start doing it themselves.
That's crazy because we did an election party and I live streamed from my house.
Yeah.
And I'm like, I could have really done a little bit more than that.
Augusta Rule.
Yeah, I mean, that's y'all better
have your personal assistant document it, and then you create a leasing agreement for the date that you did that.
Well, I got to work with you, bro. I got to work with you now. You done sold me on this right now. Let's see. I just got about 4 more questions. Let's see. Can you actually write off your vacation, your car, and your clothes, or is it just a social media hype that people make up?
So I write off my vacations, my cars, and my clothes because I'm doing everything for business. So when I go somewhere, it isn't a vacation. It is a business trip. If I told people that I was going on vacation, I just incriminated myself.
Yeah.
If I'm a business owner and I want to deduct something that would normally be viewed as a vacation as a business write-off, I need to make sure that I'm doing business. And what the IRS is looking for is how many of those days that you're traveling are dedicated to business and when are you returning? Most people, when they go on vacation, sometimes they like to return back on a Sunday. So that means that Sunday is not business for you and that Saturday is not business for you because most businesses don't operate on Saturdays and Sundays. So what I tell business owners to do is try to leave on a weekday and return on a weekday. If you're going to leave on a Wednesday and come back on a Monday or a Tuesday. So that way we can do what's called wrapping your weekend. I can count the Saturday and the Sunday that you were laying out by the pool as business days, a part of your entire business trip.
Yeah, that makes sense. I did 2 trips like that this weekend, and like I said, my CPA probably have no idea how to do this. Because I went to a trip. My wife came along with it. She was involved in it. She was involved in a business event, and we couldn't leave our kids at home, so we had to bring our kids
without a doubt.
And some of the off time they had a chance to swim. We did the same thing in Tampa. We went to Orlando, same thing. And I'm like, there's got to be a way to write that off. I mean, because we had to bring the kids. We can't leave our kids at the house by themselves. And then also, I was there strictly for business.
Yes.
It wasn't a vacation.
Yes.
It was literally I'm working on the weekend because it was a Turning Point event.
Yes.
I had to speak the whole weekend. And then the whole next week, I was at another conference. And we were there every single day. We had to go to dinner. I had an itinerary. And they actually sponsored the hotel that we stayed in.
Wow.
So all of that was all business expense and the flights and everything. So I'm like, there's got to be a better strategy. Of course, we want to write that off because it was a business trip. But
do you want me to show you how?
More strategy.
Yeah. So here's how you would do it. First, if you place your children on payroll through your S-Corp, you're going to pay payroll taxes for them. So we're not going to do that. What I would recommend is let's set up a LLC, a multi-member LLC between you and your wife. It's going to be called an FMC, a family management company. Your S corporation is going to write a check over to the FMC. Your S corp receives a tax deduction for it, and instead of you just having money inside of that LLC that you spend money on, it's going to be used to pay your children. Your children are 14 and 4. We can pay your children up to $15,750 without them needing to file a tax return. So if we move over $30,500, we can issue out $15,750 to each one of your child, and that is a tax deduction. Any additional money we move over into the management company, now that can be expenses associated for your wife supporting you from the management side of the business. When she's traveling with you, she's probably helping support you from an apparel perspective, emails, text messages, you name it. So she's a true supporter. So if we place her underneath the family management company as well, you're also getting a deduction for some of the expenses that she has when she's traveling on behalf of the business.
Bro, you probably, just talking to you, probably saved me a couple $100,000 in taxes. Let's get to a few more, just like 2 more questions.
Yeah.
Or maybe 3 more questions.
And let me know if you want me to go back and talk about the clothes things. I didn't get a hit on that.
Yeah,
one.
let's talk about that.
Yeah.
Let's talk about that because in grooming stuff.
Yes.
Because I get my hair cut.
Yes.
My barber, he used to
show up.
A long thing. I have a barber station downstairs, barber chair and a little steamer and everything. So he would come here during business hours and he would cut my hair. And I have to get my hair cut because I'm presenting on television.
Yes.
All of these things. I go to conferences. I always have to get my hair cut. My clothes and my travel, I like to have good quality travel backpacks and travel gear, whatever the case may be. I like Louis Vuitton because they make the best ones. I sound like that little scammy pastor. I don't know if you saw that little deposition. This dude, he got divorced from his wife, and she was like, why do you have to have Versace suits? He was like, well, I sweat through my suits, and the belts are better. But anyway, so I do that, and then to be honest, like my apparel that I make, I wear. I wear all this apparel that I make. I don't buy clothes outside of business clothes.
Absolutely.
Like, yeah, so a lot of things that I wear, I mean, I think almost everything I buy for a specific purpose.
Yes.
I don't buy stuff to just hang around the house. You know what I mean? So all of the clothes I buy, these pants that I literally buy, I got 6 pair of these because I wear these to work every single day. This is my work uniform.
You just said it though right there. This is my work uniform, and I buy it for a specific purpose. Under Code Section 162A, a business owner can take a business deduction if it's ordinary in nature, necessary in nature, and reasonable in nature to the business owner in the pursuit of income. So for you, buying these pants and black shirts is a part of your image every single day. And maybe you've bought 6 or 7 of the same types of clothes. This could become a part of your uniform. What I would also encourage to do, if you're ever underneath IRS audits, make sure you also embroidered your initials and possibly even your logo. So that way you also physically have it as a part of your uniform as well. That's something I do with all of my suits. And then I'll even do that with my travel bags as well. I have a travel Louis Vuitton backpack that I always go everywhere with. So I embroidered my name, embroidered Tax Alchemy as a part of it. And that's my travel luggage. One thing I also do that most people don't even think about is I write inside of my operating agreement the types of things I'm going to be doing that year at the end of the year for the following year. So if I know next year I'm going to be buying, a certain amount of clothes, I might define in my operating agreement budget for at least $100,000 apparel in the following year, suits that are blue, suits that are black that match the Tax Alchemy brand. So now it's already being written in my operating agreement how I operate as a business owner with my clothing. So that way, I've done more than enough to show the IRS that I am documenting things and that I'm intentional about what I'm doing as a business owner.
Bro, you taking it to the next level, man. I didn't even think about that. Some of those things of just solidifying, this is my uniform. Let me logo it. I own a print shop, so it's easy for us to tag all of the stuff that we use.
Easy.
It's because some people are so unfamiliar, you don't know what will get you audited. Now, speaking of cars, so I have a couple company vehicles and I have a vehicle for marketing. I house them here at my headquarters.
Yeah.
I don't take them home. They're here. They're made for marketing. They're company vehicles.
Absolutely.
So I park them here at the headquarters. So what is the rules or some of the write-offs that you can do that's less knowledge or knowledge-based, meaning people don't really understand that you could write these off? And what are some no-nos?
Yeah.
Right. Because I know people like to hear you could do this, but I want people to know, are you doing this and you're going to get caught up?
Yeah. People think that when you put your logo on your car that it all of a sudden makes it a write-off. It does not make it any more of a write-off. The IRS does not care that you blasted your logo across your Tesla truck or whatever it is. Yeah. What they care about is business use. So you have to track how much time that you're actually driving your car every single year for business versus for personal. What I like to do to make it easy for business owners is if we have a 7-day week and you're working 5 days out of the week, then we know that, those 5 days out of the week, your car is business. And then let's just categorize Saturday and Sunday as personal. Typically, it comes out to 80% of the year that the car is being used for business and about 20% of the time is being used for personal. That's about the average for most business owners. Now you have two choices on how you're going to write this off. You're either going to take mileage or you're going to take actual expense. Mileage means that you're writing off 70 cents per mile of every single mile you drive, which unless you're an Uber or Tesla driver, most of my clients aren't driving that much to where they're trying to take the mileage. So they're going to take actual expense. What are the things I'm actually spending my money on? Car payment, gas, car washes, you name it. And these are deductible in the year in which you incur them every single month. Now, if you happen to want to leverage some of Trump's new tax benefits, like 100% bonus depreciation, you can look at a vehicle that weighs over 6,000 pounds and you can play into his tax strategy of bonus depreciation. If you buy a qualifying vehicle that weighs over 6,000 pounds that's also under 14,000 pounds, then you can write off the entire vehicle's purchase price in 1 year with code section 179 and code section 168K. So we see a lot of people that are buying like G-Wagons or F-150s, and they'll put a small down payment down, like $5,000 or $10,000, and then they'll write off like $100,000 or $200,000 car. So they're taking out OPM, other people's money, bank's money, to go acquire this asset and then depreciate it on their tax return. So they're saving money on their taxes with a little bit of money down, if that makes sense.
I cannot confirm or deny we have a G-Wagon as a business.
I got one too, man. Yep.
It's like the most, to me, it's like the most popular, practical.
Yep.
And it matches the weight specifications.
Yep.
It's a good, reliable vehicle.
It's so practical. I have a Urus and I have a G-Wagon. I reach for my G-Wagon keys more than I reach for my Urus keys.
Yeah,
it's just so much more practical to drive every single day. It just makes sense.
I bet that Urus is crazy, though.
Urus is pretty crazy.
Is it fast?
It's very fast, bro. It doesn't feel like you're in an SUV. It really does not feel like you're in an SUV.
It looked kind of aero, though. I saw a couple of them, and I'm like, why would somebody buy that thing unless it's really crazy?
And it's over 6,000 pounds, too.
Oh, is it?
It's over 6,000 pounds. It qualifies for the... We're going to do some tax planning this year.
After we see y'all, we're going to talk about it. All right, let's see. If someone's broke right now, what is the fastest way to get a point where tax strategy actually matters?
Okay. If you're broke, you need to get a high income skill. High income skill leads to high income. High income leads to high taxes. High taxes leads to you having a tax accountant. Your tax accountant leads to you having a tax professional. This is the order of how people get to tax strategy. It's going to first start off with you making money. Then you're going to say, okay, I'm not going to file my own tax returns. I'm going to hire a professional. Now I want actual professional people who do things for me because my time is more valuable now. Then you'll get to a point where you're like, hold on a second. What I just paid in taxes is someone's starting salary coming out of college, which is right around $60,000. If you're paying $60,000 in taxes, that means you have a $300,000 salary at a minimum. This is when tax planning starts for you, right around $300K, because you're literally paying too much money in taxes that can be reinvested into assets that can offset your taxes, and you have enough income to justify you making the type of investments to where you can start focusing on offsetting your tax bill.
Oh, I love that.
Great question.
What's the biggest IRS red flag that gets small businesses audited?
Commingling expenses. If you cannot practice the discipline of using a personal credit card for personal expenses and a business credit card for business expenses, when you get into an IRS audit, what happens is they look at you and your business as one person. Now it's like, okay, screw your business expenses because it's all personal because you were lazy and you couldn't separate your business from your personal expenses. Now I can literally, as the IRS agent, just be like, nope, disallow it. Nope, disallow it. And you can't fight because you did it wrong.
Yeah. That's a good thing. You know, one thing that we did years ago when we got our Amex is that we did that very thing. I say, because we don't want to use, I never use debit cards.
No.
I never use my debit card.
No value.
It's a waste of time.
Yeah.
So we got Amex Personal and Amex Business, and that's what we do. Me and the wife, she got one. I got, we got one on the same account, and we literally, anything we do personal, even when we travel for business, if we are doing something personal on a business trip, like the weekend that we do things on our own, we do all that on our personal card.
Discipline.
And then the business card. These guys have the business card. All my business people have, all the top tier people have a business card, and they just run the business stuff through there.
Yep.
Nothing personal. If I'm going somewhere and it's business, I use the business card. When I go get, if I'm at work and I have to get food at work, I do it on my business card. If I'm not at work or like I'm clocking out or something like that, I'm not going to work anymore. My day is over. I go do everything on my personal card. So. I'm glad we did that very early on because I was really concerned about that because doing an owner's draw, it's kind of like, at first when I first started, I wasn't making really hardly any money. I was just commingling, right?
Yeah.
And then after a while, I said, bro, I need to be smart about this. Business, personal, and then obviously I draw whatever money I need to cover the personal credit card.
Yeah.
But that's another thing I think people need to realize is that you should never use a debit card. No. I just don't see there being a way to use a debit card. There are some reasons to use your debit account. Yeah. Meaning to pay for certain things because there's a fee associated with credit cards. And it kind of depends on how much you care about the fees, right? Because there's some things like I take care of some of my family members and I put it on my personal card. And it's another. I got to tell you that off camera what a strategy I think there. And you got to tell me if it'll work or not. But I pay for the rent on my credit card, but there's a slight fee. Yeah. However, I like credit card points. Yep. I like getting those points because at the end of the year I get to take all of those points, and then there's strategies to using those points. Yep. Without
transferring them to airlines,
them to personal and different stuff.
Hotels.
Like that.
Absolutely.
Last question. How do you pass wealth to your kids 100% tax-free? Is that even possible?
Yeah, first off, there's two different ways in which you can pass wealth. Wealth is the transfer of information, and it's also the transfer of assets. I would argue that information is almost more important than the transfer of assets, but we need to be focused on both in this lifetime. So I want you to focus on both. In order for you to transfer your assets correctly, what you need to look at is making sure that you have the right type of trust structures in place. Now, I'm not an attorney, and I highly recommend that you speak with an attorney. But what most attorneys will tell you is having a basic trust allows for your assets to get a step up in basis when your beneficiaries inherit them. What this means is if my mom bought a property for $250,000, that's her basis when she bought it, $250,000. If it's worth $1 million when she passes away, God forbid, that's $750,000 of capital gain that your children have to pay within a 6 months period of you being deceased. While they're mourning your death, they're dealing with taxes. That's a lot to deal with. What if you could just give them $1 million property entirely tax-free? Well, that's what the step up is. When you get a step up in basis, your basis is going from that 250 to that million, meaning if I were to sell, there's technically no gain. I'm experiencing tax-free gain. That is a big transfer of wealth. That's $750,000 of tax-free wealth right there. Let's just multiply that by 10 properties, and now we have real tax-free wealth. And this is the game I'm trying to teach people. Why not build up a real estate portfolio that offsets your active incomes while you're alive, and then turn around and pass on that portfolio to your children that gives them tax-free wealth after you're dead?
Love that. Carlton, where can people find you on social media? And if they want to, they should. Everybody on here that make a certain amount of money that you think, unless you're doing standard deductions, if you outside standard deductions, you need to get with a person like Carlton. So how can they work with you? How can they follow you on social media?
Yeah, absolutely. So social media, definitely check us out on YouTube and Instagram. It's Carlton Dennis on all platforms. And if you're ready to take a call with our team for tax strategy, visit our website at taxalchemy.com. We'd be happy to provide you with a complimentary consultation.
All right. Thank you, brother.
Thank you.
I appreciate it, man. Appreciate you.
Absolutely.
We out of here.